Hello, the webinar will begin in just a few minutes. We're giving some people some extra time to get in with all the technology issues going on with internet bandwidth right now. We'll be back in just a few minutes. Welcome to NAHRO's Washington, D.C. virtual convening. We're giving just everyone a few more minutes to connect. We'll be starting the webinar in just a couple of minutes. Thank you. Welcome to NAHRO's Washington, D.C. virtual convening. We'll be beginning in just a few moments to give people a little bit extra time to get in to the webinar. Thank you. Hello and welcome to NAHRO's Washington, D.C. virtual convening. I am Georgie Banham. I will be today's moderator. I'm NAHRO's Director of Policy and Program Development. Before we begin, I do want to announce that Dr. Mark Calabria from the Federal Housing Finance Agency will not be able to join us today. He has an urgent conflict, an urgent meeting to attend. He will be joining us tomorrow, though, at 3:30. We'll be sending out an additional email to everyone attending today with information on tomorrow's session. So we apologize for Dr. Clabber not joining us, but he will provide us his information and the session tomorrow. Before we get too far in, I do want to thank our sponsor for this session, Yardi. Their generous support has made this session possible. I also want to make sure we address any technical issues. If you are having any technical difficulties, please send us an email. Go to NAHRO4@NAHRO.org. Again, go to NAHRO4@NAHRO.org. We are also going to take advantage of a couple of features in GoToWebinar. There is a chat feature. There's a little arrow next to the word chat. You can click on that. A drop down will come down, and you can type in your questions and comments right there. We'll go into our question queue, and there'll be questions for Dr. Bostic and Adrian Todman, NAHRO CEO, later in today's session. So please submit your questions as they come up, and we'll address those later in the session. There is one handout for today's session. It is actually NAHRO's 2020 legislative and regulatory agenda. I'll make a few comments on that towards the end of today's session. That is in the handout section for you to download. With that, let me turn things over to NAHRO President Sunny Shaw for a welcome and introductions.
Wonderful. Thank you, Georgie. Good morning and or good afternoon, NAHRO family, from whichever end of the country you are on. Welcome to this webinar. We're excited to be able to bring you this convening that is representative of our time together that we would have had in DC on this very day. So I would like to be able to welcome and introduce Dr. Raphael Bostic. Dr. Bostic took office June 5th, 2017 as the 15th president and CEO of the Federal Reserve Bank of Atlanta. He's responsible for all the bank's activities, including monetary policy, bank supervision and regulation, and payment services. He is a participant on the Federal Open Market Committee, the monetary policy-making body of the Federal Reserve System. From 2009 to 2012, President Bostic was the Assistant Secretary for Policy Development and Research at the U.S. Department of Housing and Urban Development. In that role, he was a principal advisor to the Secretary on Policy and Research, helping the Secretary and other principal staff make informed decisions on HUD policies and programs, as well as on budget and legislative proposals. We are thrilled to have you here with us, President Bostic, and with that, I'll turn the time over to you.
Hi, Sunny. Thank you very much for the kind introduction, and welcome everyone. Thank you for having me here to talk at the conference today. I guess this is a virtual conference. Sorry I couldn't see you in DC, but I think this is probably the best way to do this. I wanted to just start by thanking NAHRO, thanking Adrian and Georgie for having me here to talk with you. And when we had originally talked about doing this, we had the idea of inclusive economic development as a part of the conversation, as to be the main topic. But given recent events, what I thought I would do is give you some start by talking about my perspective on the crisis, kind of where we currently stand from a Fed policy perspective, and just give you some insight into where we are on that. I would like to spend some of the time talking about the work that I had been doing on inclusive economic development, giving you some background of the project, and then some of the takeaways that we had. And then I want to close with some questions to give you a chance to ask questions that you might have. All right, so let's start with the crisis. First and foremost, this crisis is really actually quite different than any crisis that we've had in the past, in that it's a public health challenge. This is first and foremost a challenge in our public health system and how we manage that. And that makes it very different from previous economic slowdowns, which are really driven much more by either excesses in risk-taking or breakdowns in key markets or a loss of confidence of the public. And as such, it really means that the response is going to be different, but the whole trajectory of this crisis from an economics perspective is going to potentially be quite unlike anything that we've seen before. And then a second context for thinking about what's happened is really the idea that the economy was performing quite well in the lead up to this. With the Federal Reserve, we track the macro economy. We have two mandates. One is stable, maximize employment, and in the lead up to this crisis, we were at almost record levels of unemployment, very, very low, in the 3.5 to 3.6% range. And then our second mandate is stable prices, which is typically measured by inflation. And our inflation target is 2%. And inflation has been coming up a little less than that. The important thing to be mindful of in the inflation context is that we weren't seeing runaway inflation, which would suggest that there are imbalances in the supply and demand of product. So, what does that mean for how we think about the world today, or how I think about the world today? I should say the thoughts I'm going to say today are mine, and they don't reflect the Federal Reserve per se, or the Board of Governors, or any of my colleagues. But what this means is that the stresses that the virus and the public health challenges are placing on the economy are not necessarily those that will potentially endure if we can get past the public health crisis. Right now, the fundamentals, as I said, are pretty good. And if we can get through the crisis without having those fundamentals be seriously and permanently degraded, there is some chance or hope that the economy can rebound quite rapidly and robustly, and we can put this behind us and be back on some stable footing. Now, in terms of the challenges that we're seeing right now in the economy, you guys clearly are aware of all these. I just wanted to just make clear that the two biggest dimensions that we have challenges on are cash flow, so cash flow for businesses and families, and then credit, because if you don't have direct cash flow through revenues or income, then you may have to turn to credit. And what we're seeing is stresses in both of those markets for families, for businesses. And I know you've heard a lot about families and businesses in the media. I did want to also emphasize something that you guys are acutely aware of, but it's also put stress on nonprofits and, importantly, government. So it's an across-the-board stress that we have, and really what we're looking for, in my view, is trying to find ways to help people, businesses, nonprofits, and governments bridge the time for this distress until we're on the other side, and hopefully bridge it such that everyone is in as good a position and condition as possible. All right, so what we've been doing in terms of the Fed is really three things that I wanted to emphasize. First is that we are continuing to do the things that we do to serve the American economy every day. We are still providing cash to banking institutions as necessary. And I will tell you that in the recent period, I know you've seen many analysts talk about cash being king. That's put a tremendous demand on our staff to provide cash. I think demand is up about 20% over where it's been in normal circumstances. And so that means that our staff is working extremely hard. We're also working to make sure that the payment infrastructure continues to operate in a seamless and robust way. So all clearing and settlements, wire transfers, all those things, all those facilities are up, they're running, and we anticipate and fully expect to keep doing that to make sure that the basic infrastructure of commerce and the economy continues to run on a sound footing. But then we've also done a number of things in recent days. I was talking with some folks who said, it seems like every Sunday you guys are making some announcement, and we've been pretty busy in the policy space. And partially that's because we want to make sure that there is maximum support for the economy in terms of the cost of capital and the cost of borrowing and making investments. So by lowering interest rates to near zero, we've accomplished that. And then we also started to see tensions in other parts of the financial market. We saw stresses in treasury markets, in mortgage-backed security markets, in a whole host of other areas that are essential for households and businesses and governments getting access to credit. And so many of the actions that we've taken have been with the goal of shoring up those markets to make sure that they continue to function. So I've listed here just a number of the supports that we've offered and actions we've taken to offer those supports. So we've purchased bonds and securities to make sure the treasury markets and mortgage markets function. We have set up some lending facilities to help in corporate bond markets and money mutual fund markets with primary dealers, all of whom are really important institutions to support the economy. We've lowered the cost of borrowing through the discount window and extended the terms of the borrowing through the discount window, and we've reduced reserve requirements. The discount window, for those of you who aren't Fed aficionados, is the vehicle by which we typically give short-term loans to banks, usually overnight, to help them manage cash flow as they settle all of their institutions. And typically there's a rate that's set above the baseline rate to allow that facility. We've lowered the cost of that to sort of our baseline rate, so there's no extra cost to borrowing from the discount window. And we've also increased the possible terms of that up to as much as 90 days. And the idea here is that we don't want banking institutions to feel like they can't participate in any kind of lending or credit markets because they don't have access to capital, because they are liquidity constrained. So the discount window is a way to get those loans at very low cost to make sure that they have the capital available to continue to provide lending and credit to the institutions that are their customers, as well as the households that are. And then we're also working with financial institutions to make clear that we want them to work with their customers. Everybody understands that the shock here is not one that was driven by or caused by reckless behavior on the part of businesses or risk takers. And so we want as much as possible for bank institutions to find ways to help their customers bridge this time and get us to the other side with minimal cost. So those are all on the monetary policy side. I did want to just note that the fiscal side of the house is going to be particularly important. They have the ability to do a set of things that monetary policy can't. And so I've always viewed them as a necessary and important partner to the actions that we've taken. There have been 3 rounds of fiscal response by the Congress and the executive branch, and those are important. And we will continue to hopefully see that support get into the economy, get into households and families' hands so that they can weather the storm, cover essential bills, and get out to the other side in a good place. I've not been involved in those negotiations around the fiscal packages, so I'm probably not the best person to talk about why is one thing in it or another thing out. But what I will tell you is that both us at the Federal Reserve, as well as elected officials and other policymakers, continue to monitor the economy and the marketplace to make sure that we understand where stresses remain and see if there are things that might be done to try to alleviate those stresses. So I have a team right now that is working tirelessly to engage with businesses and governments and nonprofits and households throughout the Southeast. My district is the 6th district. It includes Florida, Georgia, Alabama, and parts of Mississippi, Louisiana, and Tennessee. We're reaching out as much as we possible to know what banks are doing, how they're experiencing things, how big businesses, small businesses, nonprofits, and getting a sense across all sectors that we can about what's happening. We'll continue to do that, and we'll continue to try to find solutions where we can. So that's a backdrop of what we've been doing. And I wanted to make sure that you got that perspective because that is the stuff that you'll be wrestling with on a day-to-day basis. And I hope that was helpful. Now, what I really had originally intended to talk about was something that I call the Access to Opportunity Project. And it's really a project that was designed to try to help build a playbook on what you might think of as inclusive economic development. And that playbook would effectively lift up promising policies and strategies that have been put in place to get high opportunity to low-income families who may not necessarily have that. Now, there are researchers, and I'm an academic by training, but I was really struck during my time at HUD that practitioners and policymakers often didn't have in their head actionable items on things that they might do to achieve inclusive economic development. And when I was working on the Affirmatively Furthering Fair Housing project and the revision of that regulation, I would often go around and ask folks, so what's your canonical example of successful inclusive economic development? And oftentimes I would not get any response, or if I did from multiple people, it would be multiple responses. So we really decided to move forward with a project to try to fill that space. And I was working with Cheryl Verlaine Whitney. She's in Seattle, a wonderful policymaker and practitioner who worked with Ron Sims with King County in the King County Executive's Office. Now, in talking with the funders, and we got funded by the Open Society Foundations and the J.P. Morgan Chase Foundation, what we heard was that another interest was in building local capacity. And by capacity here, they had in mind researchers and academics who were available for local practitioners who could bring information to practitioners that was being developed by academics and researchers. And so we sought to do that as well and added that as an additional focus of the Access to Opportunity project. Now, in particular, we were looking for projects that were in one of two areas. One, we might provide access to opportunity by providing low-income families with access to neighborhoods that have these high opportunity amenities. Conversely, we might try to increase the presence or existence of high opportunity amenities in places that currently don't have them. And so we wanted, going into this project, to be agnostic on how people get access to opportunity. And so rather, we decided to really try to get insights into both types of efforts. Now, we did this in a multi-stage process. First, we canvassed metro areas for possible projects and research partners. And we selected 3 Western metropolitan areas, Portland, San Diego, and Seattle, as our candidates. And Cheryl and I went to those cities and did 2 and 3 day canvassings where we tried to look for possible projects and research projects, and research partners. And then we came back and then we tried to determine of those and which projects were suitable for research, and then which partners locally had the potential to increase local capacity. Now, we also developed a framework as we did our canvassing to try to categorize efforts that were happening locally to increase access to opportunity. And we had 3 dimensions that were important. The first was strategy. And so the 2 strategies could be increased access to neighborhoods and high opportunity amenities, or to increase the prevalence of high opportunity amenities in places that lack them. But there were 2 other dimensions that emerged as we started to go out into the field and see what was happening that both of us felt were important. The first was that the location of the neighborhood matters. And so we tried to distinguish between projects that were focused in a central city location or projects that were in suburban or ex-urban areas, because it was our sense that the issues that were being faced were different. And then a third dimension, in addition to strategy and place, was time. And we focused on projects that were either long established and had a good history and some experience. But then we also came upon a number of projects that were new and that were incorporating efforts and lessons that were learned from prior efforts. And so 3 dimensions: strategy. We're either going to increase access to neighborhoods that have high opportunity amenities or try to increase amenities in places that lack them. We're going to look for projects in central cities or projects in suburban or exurban areas. And we're going to look for projects that are long established or newly incorporating lessons learned. So that's a 2 by 2 by 2 matrix, 6 squares. And we identified 27 projects that span this space. Of those 27, we settled on 3 after working with our funders and assessing local abilities to support the efforts. And I wanted to talk for the rest of the time about those 3 efforts. Now, as you'll see, each of them is quite different, and they had very different approaches. So just be mindful that we were not stuck on a particular approach to doing the research, but we wanted projects that were going to glean some insights or provide some insights that we could use that would be actionable. All right, so let's start with Portland. All right, and in Portland, the project we chose to look at was Humboldt Gardens. And Humboldt Gardens is a Hope 6 project originally, replacing an old public housing project called Iris Court. And so we had originally viewed this as an opportunity to invest in poor communities, and communities that are poor in high quality amenities in an urban place. But what happened was that neighborhood gentrified rapidly. And so instead of looking at this project as an anchor for economic development and redevelopment, instead it became an anchor for affordability, and became one of the few projects that still had units that were affordable. And so in some ways we had to mid-course correct in thinking about what this project was, and that led us to really focus much more on self-sufficiency and preserving access to the neighborhood, as opposed to spillover effects associated with the investments in the Hope 6 project. The program that we focused on here was a program for financial self-sufficiency project run by Home Forward that they called Greater Opportunities to Advance, Learn, and Succeed. The acronym called GOALS. And the idea here was really to help increase earning and improve economic independence. Now, as I said, we were trying to build capacity, and so we subcontracted with 2 researchers, Lisa Bates and Andre Tremolay from Portland State University, and they executed the project with our basically oversight and management. Lisa and Andre are both great researchers, and they did all the legwork and field work here in design and execution of the project. Now, their approach was to do 2 things. First, to do long-form structured interviews with a number of households who participated in Home Forward's voucher program. And then the second thing they did was attend community events to just get a sense of how Humboldt functions as a community within this naturally gentrifying area. And there were 3 lessons learned that I would highlight for you coming out of this. The first is that choice is a double-edged sword. Now, many family self-sufficiency programs are purposefully designed to offer their participants with a wide menu of options because out of a recognition that the families may have very different needs, and we want to make sure that the program can address and appeal to as many of those as possible. But what we found through the interviews, what Andre and Lisa found through the interviews, was that there were a lot of options, but sometimes there were almost too many options, and that participants often didn't have knowledge of some options that they found potentially appealing. They heard from a number of their respondents that, for example, the individual development accounts that were available through the FSS program could have been used, and they didn't know very much about it. And so one of the takeaways from this was that maybe there were too many options, or alternatively, maybe there needs to be a new way to inform participants to help them be aware of what options there are and what they might take advantage of. The second lesson learned here is that caseworker interaction and culture are key. What we heard was a concern from participants that coaches, that first case managers sometimes didn't have the right fit or an ideal fit with the participants' needs. There was a lot of attention to the reality that coaches and mentors really are going to have a different relationship with participants than those case managers focused on compliance and property managers and property management. And then we also heard that many of the participants had case managers through multiple programs, and they had hoped that perhaps there would be some benefit by having the programs coordinate a bit more on case management to see if there were ways that we could draw from the best of all of them moving forward. And then a third takeaway, and one that I'll talk much more about, is that market forces and a history of housing insecurity are major challenges. Clearly, in the case of Humboldt Gardens, what we saw was gentrification, the market forces being very large and changing the relationship between the housing project and the neighborhood, and in turn, the residents in the neighborhood. And so being aware and sensitive to those realities is something that we just have to recognize and understand. Next, I want to go to San Diego and talk a bit about a project called the Achievement Academy. Now, the Achievement Academy is, one day I'll get this slide management down. The Achievement Academy is a project of the San Diego Housing Commission, and it's a there we go. The Achievement Academy is a project of the San Diego Housing Commission, and it is another program that's very similar to Home Forward's Goals programs, in that it's a suite of workforce development programs for voucher recipients. It's a voluntary program, and it partners with a number of projects in the programs that are offered by the Housing Commission. Now, this is a large suite of programs. There are actually 39 programs or sources of assistance that we counted in this project. And the project featured members from 3 populations, and this gave us some interesting variation to use. One were clearly voucher holders through the Housing Commission program directly, but there were 2 others. So San Diego, the Housing Commission had a partnership with the Monarch School. The Monarch School is a K-12 school for homeless youth. And what the commission decided to do was give parents from this program special access to the Achievement Academy. And then there was another program called The Power of One. This provides additional group support for single parents and single heads of households beyond those offered by the voucher program or those offered by the Achievement Academy. And this includes support for a personal workforce development specialist that partners with each participant and group workshops. And because there are 3 populations, it really gave us an opportunity to compare and contrast the use of the various features with the needs of particular participants. This project was done by Sean Flanagan, who is at San Diego State University. Sean really worked hard on this project, built an excellent team, and has been a good voice for the findings of this. I did not know Sean before this project, but she definitely proved to be a wonderful partner and someone who we both felt really pleased to get to know much better. Now, what Sean did with her team was 2 things. First, through the Housing Commission, we were able to get program data on use of the features of the Achievement Academy. And then Sean did an analysis. Sean and her team did an analysis to see how the various features were being used. And what she found was there was indeed significant variation in the use of features across the three populations. For example, Power of One participants, and you remember those who were getting the extra help on workforce development and understanding their situation a bit more, they were much more likely than others to seek health and wellness referrals. Monarch parents, those were parents in the K-12 program, were by contrast much more likely to seek help searching for education and training efforts. And then the voucher holders who weren't in either program were much more likely than both of the other types of participants to seek a savings account. So this really does emphasize and accent how important it is that we get variation in the program's features, because that variation then can translate into different uses, and so we can make sure that participants match better with the program features. Now, they also did track participants over time and did a survey. And this survey, it was 3 rounds of interviews over 15 months. The second interview happened about 8 months into the participation. They interviewed 31 participants initially and 22 participants for all 3 rounds. And what they found was that, first of all, in terms of work outcomes, there was a mixed bag, but much of it was actually positive. 1/3 of participants got a new job or had a better working experience, either through in terms of getting a raise or having more hours to work or getting more benefits. 1/3 actually got additional education or training beyond the Achievement Academy. But just to note that this was not across the board positive, 3 of the participants actually lost their job during the course of the interview period of 15 months. Another thing that came out loud and clear through the surveys was that life circumstances actually really matter. 3 participants actually became homeless during the period. 7 were evicted, either formally or informally over the 15 months. And their histories were tough. So more than 1/3 reported some history of mental health problems, and 1/3 reported problems in terms of criminal justice system history. Now, we had 4 takeaways here. Choice here, again, was a double-edged sword. The variation truly was important, but just as in the case in Portland, many members found out that there were some features that they would rather have taken advantage of that didn't feel like they had a chance to. In terms of caseworker interaction, the interaction for this program was actually quite frequent, about 3 per month per participant, and those were real advisory contacts. They were not just check-ins that you might expect that occurred periodically. So this helped to establish real relationships and develop a real positive culture. One thing that was noted was that this did take a heavy toll on staff, and so morale issues were important. Dividing caseworker functions was actually something quite important. The function of supporting the participant as opposed to the function of ensuring compliance with programs, having them separated was really a great benefit for the participants, in that it reduced the reticence to share, because there were concerns sometimes that if you told a compliance officer that you're having problems, that might work against you. And then finally, the San Diego Housing Commission's voucher program is a scattered site program, but having the Achievement Academy in one location introduced a different set of costs, such as parking and transportation, that were an additional challenge for participants. And some looked for online offerings as potentially attractive. Of course, you recognize that not everyone has online access to the internet, and so having a mixed delivery system would be important. Finally, the third project was Seattle. And this was a project we looked at a regional coalition for housing, which is ARCH. And the idea here was ARCH is a regional partnership between King County and outlying suburban cities. and it works to increase the supply of housing for low-income families. And the most interesting feature here is that it's funded via general operating funds of these suburban towns. So we really wanted to know what caused suburban communities to continue to support the production and preservation of local affordable housing. The principal researchers here were Emily Lieb at Seattle University and Cheryl Whitney, my co-lead on the project. Cheryl had a lot of experience with art, so she chipped in and played an important role there. Now, Arch does a lot of things. They do advocacy. They have a housing trust fund that they have developed to build up to over about 3,500 units during his lifetime. They advise and advocate on behalf of zoning and land use changes and establishing incentives to build affordable housing, and that's translated into about 6,400 units. They pool technical resources, and they also do a lot of community engagement. And this community engagement, it turned out, was an important aspect of the lesson that we learned. Because if you think about why these local governments were willing to continue to fund out of their general funds, the one thing that we heard was that the community engagement and the time that our staff took to bring people along was quite important. And the phrase that we heard repeatedly during this research was that they traded more process to get more buy-in. So at first, maybe took a little bit longer. The progress in any particular stage was perhaps more incremental, but that led to much more engagement by participants and more continued and sustained engagement by participants. The projects were very well designed, and project management was extremely valued to make sure these properties did not become problems. And then there was this willingness to be incremental, which was quite important. So overall, there are a number of main takeaways. We've talked about pretty much all of these in the course of reviewing the three projects. I would say that this last point about market forces and history of housing insecurity being a major challenge is really quite important. And perhaps it's really quite timely given what we are engaging and embarking on right now. And so it's a nice way to come through this. Now, the report and some nice one-page summaries, I guess they're four-page summaries of these, can be found at the website of the University of Southern California and the Bedrosian Center. So I've included a website link there that you might go to if you want to see more about this. I will tell you they're working on their website now, so that site may not be functional right now, but it will be very shortly. Now, one last thing I wanted to say, that as you continue doing your work and working on your projects and your efforts, I would really encourage you to consider partnering with local researchers, because we need to do a better job at documenting our success and telling the stories of these successes so that future efforts can happen a little better, a little more easily. And we want to definitely be a partner on that. As you know, as I hope all of you know, the Federal Reserve System has community and economic development functions across basically every reserve bank. And we're actually embarking on a storytelling effort in recognition of the fact that if you don't tell your stories, if we don't tell our stories, then others just won't know them. Now, I also wanted to just note that my bank, the Federal Reserve Bank of Atlanta, has embraced economic mobility and resilience as a strategic priority. And so we're really looking ways to make a difference. And as a consequence, I want to make sure that you guys are connected with us to help us think about how we might do that more effectively and find out about all that we're doing. So this is, we're on Twitter, we're on Facebook. I've got a Twitter account as well. It's just at my first name, last name. You should be able to find me. I would encourage you to follow. And then you should also try as much as possible to get our weekly newsletter. So you can text FRBA to that number, and you'll be up to date with all the things that we're doing. The last thing I wanted to say in just closing is just thank you for all the work that you do. I really appreciate it. It's really important And even though you don't hear it enough, I'm sure, please know that we are all grateful for the support that you offer. So thank you very much. I appreciate you being adaptable for this virtual webinar, and I'll take some questions at this point.
Great.
Excellent.
Thank you so much, President Bostic, for that riveting presentation. And I'd like to say thank you for allowing us for a few moments to think about something else other than the coronavirus. Certainly, the research project that you addressed here is of high interest to all of our members and many folks who are listening. And we've not been able to delve into some of that core mission thinking in some days. So absolutely thank you. And thank you for all that you are doing as it relates to inclusive economic development. As we're waiting for some questions to come up, and I really encourage everyone here to send in your question. I'll take a quick pause and ask Georgie Banner if you can give instructions if somebody wants to ask a question, what they should do, and I'll come back.
Absolutely. Thank you, Ms. Taubman. Please go to the chat feature in the GoToWebinar bar. There's a little arrow next to the word chat. That will drop down, and then you can type in your question right there, and it will pop up into our question queue. So please take, now there's plenty of room in the queue. Please feel free to drop in your questions now. Back to you, Ms. Taubman.
Thank you very much. So President Bostic, let's start with where you began, with some of the response to COVID-19. So the Federal Reserve did drop the interest rate to 0%, which in some quarters would seem impossible. But we are also hearing that there's still more support that the bank can lend from a monetary policy perspective. Is it possible to get below 0%? What does more support look like?
Well, it is possible to go into the negative interest rate range as a technical matter. It's not something that I think is particularly attractive as an option at this point. For me, I think that going to below zero really sends some difficult signals to the marketplace, and I wouldn't go there. Instead, what I think you can look at for things that we can do are some of the things that we're doing now. So standing up facilities, using our balance sheet to extend credit to particular markets where liquidity and their functioning is coming into doubt, and encouraging bank institutions to be partners with communities to help them move forward. And an additional thing that we are doing, and I'm trying to do, is make sure that just everyone is aware of whatever projects and programs for assistance that are out there are available. I have a concern that many small businesses, for example, that aren't typically used to working with government programs are not going to be particularly prepared or well equipped on how to think about participating in these relief programs. So we're going to try as much as possible through my infrastructure to get the word out and to make sure that that people don't suffer needlessly, but rather take advantage of all the things that are available to them.
Certainly, thank you. One more question related to the pandemic, and we'll move on to some questions on the housing research you presented. You mentioned that you certainly were not involved with any of the fiscal side of the house as it relates to the relief bill that was approved last week. But there are some folks who are saying that $2 trillion may not be enough, that we may need more. You know, I don't know if this is a question that you're able to answer from your perch, but do you think that we might need more than a $2 trillion relief package?
So this, I don't know yet. I think what we're going to try to do is figure that out in the next couple of weeks. So as we're doing our outreach, one of the things we're trying to understand is, you know, what's the take up of the relief? Are there those that are being left aside or outside? And to what extent are we missing important parts of the economy? And as we think about who needs support. And my view, and I'll say this is my view, if we're seeing that we're leaving out or missing important parts of the economy, I would be very open to considering additional ways to support those parts of the economy to make sure that that we don't leave folks behind. And as a consequence, that means that we're going to be bigger than 2 trillion or whatever the number turns out to be. Then that's kind of where we're going to be. I do view this as very much an emergency situation where it's all hands on deck and you do whatever you have to really make sure that we get through this as whole as possible.
Thank you. So I'm looking at the questions we have coming in, and let's take a pivot to the wonderful housing research and I have to say, it's been some time, if forever, I've heard the Federal Reserve Bank anywhere engaging at this level of research with local housing practitioners. So thank you for that, and kudos to you. So here's one question.
You're welcome with that.
Yeah, thank you. Here's a question that there's some of our members who are maybe interested or may also already have relationships with local researchers, but they're constrained in terms of the depth and width of their research based upon how much funding they have available. Given the call to action you just gave all of us at the end of your presentation to partner, are there any words of wisdom that you would give to housing practitioners who are trying to raise funds for their research projects?
Well, I guess what I would say is my experience has been that there are foundations out there that are actually quite interested in partnering with local governments, with local nonprofits and the like, to get this research done. And one thing that we've been doing at our bank is really trying to facilitate connections between the research community locally and nonprofits and other researchers, others who are hoping to get research done. So what I would encourage is that the community get to know the foundations and the funders who are out there, and if you don't know who they are, I would say reach out to perhaps a local Federal Reserve branch. If you're let's just say this: if you whatever district you're in, there is a Federal Reserve bank that is covering your district. Find out who that is, reach out to them, tell them you want to be involved in economic development efforts and facilitating research on this stuff. This is a role that the Fed can play to be a partner and can be quite helpful in that regard.
Excellent. That's good to know. So look out to a Federal Reserve branch near you. That's wonderful. Let me ask you another question. Over the past couple years, we have been really intrigued that randomized controlled trials, and I know that you are an academic and our former Assistant Secretary and PNR at HUD, a randomized controlled trial seems to be the prevailing way that most researchers want to look at the impact of place and neighborhoods on family outcomes. Those tend to sometimes create problematic situations at a practitioner level. Are there any other research types of interventions that can be used other than RCTs that we can hang our hat on?
So this is actually a very interesting challenge that we have. The randomized controlled trial is liked by researchers because it gives you the cleanest measure of whether an effort or an initiative actually caused the thing that we were trying to accomplish. So there's an appeal there. The challenge, though, as you noted, is that they're often very difficult to do. They can be very expensive to run. And as a consequence, you don't get very many of them. So if you'll note, in our project, the one I just described, we did no randomized controlled trials. And one thing I think is important is that we all be much more open to the idea that qualitative research has an important role to play and can actually inform our understanding of things in very important ways. So that's a message that I tried to lift up as much as I could at HUD. And it's one that I think we need to continue to wrestle with, because our desire to have the perfect may in some ways be blocking our ability to really benefit from the good. And that is truly a tragedy, given that there's so much need that's out there right now. I don't think we have the luxury of being able to wait till we come up with the perfect in order to start to do things and start to make positive change for people's lives. So, this has turned into one of my soapbox things. I'm sorry about that, but I
No
do
worries.
think it's important that we don't get so hung up on methodologies that will get you in an academic journal that we miss lessons that are perhaps standing right in front of us.
Great. Thank you for that response. Um, Another type of question that we're getting is that it sounds like uh, the Federal Reserve and the Federal Reserve branches are heavily engaged in looking at monetary policy during the pandemic. But the question is, what's the direct relationship between some of the policy making happening now and helping small businesses or helping individuals? How do you describe in layperson's terms how the monetary policy that is being considered now, or was considered going to 0%, for instance, will actually help Main Street?
Well, I think we help Main Street in a number of ways. So one, it lowers the cost of borrowing across the board. So if you had a business model that required you to be paying no more than, say, 3% for your loan, if we lower the cost of your loan through our interest rate reductions to 1.5%, that gives you a little extra wiggle room to operate and to have your model, your business model, be successful. So that's one way that's direct. A second way is by our ensuring that credit markets and financial markets are functioning. So many banks, equity investors, hedge funds, and the like, they all require an ability to raise funds in a very quick way. And if those channels are breaking down and aren't available, they're going to cut off their capital that's available to businesses and to households who are looking to borrow. So a lot of the stuff that we've done in terms of helping the functioning of financial markets, I know it sounds a little arcane and sort of in the weeds. These things have been critical to make sure that financial markets function so that anybody can get credit. And some of the interventions have even been for some of the largest firms that issue their own corporate debt. Those markets have been breaking down. So if GE or Ford can't get credit, it's going to be very difficult for a small nail salon or a restaurant to get credit. So we're really trying to be very foundational. A lot of that stuff is transparent to people as they live their day-to-day lives, but they're very essential to how things work. And then the last thing I would say is our conversations with bankers has been important. In past episodes, what we've heard is that banks have been unwilling to be full partners in this space because they were worried about regulators coming down on them later on for taking on risks that were perhaps higher than they would do under ordinary circumstances. One thing as I've talked to my banking institutions, the banking institutions in my district, is to say, look, we're in a crisis. And in a crisis, we have got to give you the latitude to work with whoever you need to work with to make sure that our communities don't fully break down and collapse. And so I hope they're hearing that message. I'm going to keep giving it because that's another important way that we can help affect positively the trajectory of all of our communities in the months to come as we try to grapple with the virus.
Okay. And we're going to ask probably one or two more questions, President Bostic. So this is clearly a uncharted territory, this pandemic here across the world and an impact here in the States. But when there's a natural disaster, that it has a more specific geographic location. You mentioned that part of your geography is Tennessee. So if you were to look at the tornadoes that happen in Nashville, do the Federal Reserve banks actually take special consideration at a more specific geographic level for these types of monetary responses, or is it just because there's a national disaster by way of the pandemic right now?
Well, it really depends. I have an office in Nashville, so I've been very closely watching what's happened there. But I would say the thing that's different about this episode is that it's a public health issue. And so when you talk to even epidemiologists and other experts, they can't tell you when this is going to end. We don't have a history that gives us guidance on how long we can expect the distress to last. And that then makes lending into the future much more difficult and much more challenging. I think that's one of the reasons why we've started to see markets kind of seize up, because folks don't really know what to do, and they don't know how to assess the risks in quite the same way. So that's made this a bit more difficult. To speak to your direct question, we are very present on the ground in places as disasters happen, because we want to make sure that we understand what the needs are in terms of cash and credit, but also in terms of business, to make sure that our essential services are still getting there, so we can offer support and guidance. So we're there. We try to be not in the headlines or spotlight. It's better if we go about our business and are transparent. But you can be sure that we're in all these places trying to make sure that that things will happen as smooth as possible after. It varies from crisis to crisis. So with a tornado, that's a very immediate and kind of all of a sudden. Hurricanes, we do something very different in terms of we have a chance to do some advanced prep work to make sure the communities are set up. But we're out there and we're active and engaged in pretty much all of these situations.
Thank you so much for that response. And let me just personally thank you, President Bostic, for not just the work that you're doing, but the lens through which you're doing that work. I know that your familiarity with the work of housing authorities across the country and the challenges they face, but also the many, many opportunities they have to create a healthy platform for helping to change people's lives is something that you know well. And we can see that coming through in the way that you're talking about your work and the work that you're doing. So thank you so much for joining us today. And I am going to pass the baton to our president, Sunny Shah, to help close us out.
Wonderful. Thank you, Adrienne. And President Bostic, thank you for joining us today. One of the things that really stuck with me that you said was we need to tell our stories, and we need the data and the research to be able to back those stories up. So thank you. Thank you for sharing your insights. We truly did appreciate you taking the time out of your day today to join us. Thank you, NAHRO, for putting this together, to our fabulous team in DC. And thank you to all of our members who joined us today. Keep working hard, taking care of your communities, taking care of yourselves. Be well. And until next time, have a great day.
Excellent. Thank you, President Shaw. Well, as we leave today, I do want to announce that we do have our 2020 legislative and regulatory agenda is available. It normally becomes available during the Washington conference. There's a picture of the cover. It is available at nahro.org/2020 agenda. So please pick that up. It is also a handout to this session. So just click on handouts, and you can click directly on it, and it will download to your device. All right. I do want to thank again our sponsor who made this possible today, Yardi. Many thanks. And thank you to all our participants today, our President Shaw, and our CEO, Adrienne Todman, and President Raphael Bostic from the Federal Reserve Bank of Atlanta. With that, thank you, everyone. Have a great afternoon. Look out for an email from us about tomorrow's session at 3:30 with Dr. Mark Sarvia from the Federal Housing Finance Agency. With that, have a great day. Bye-bye.